Welcome to the Smart Property Investment Show with your host, Phil Tarrant.
Welcome to the show. Phil Tarrant here. I'm joined by two people today. I've got Alex Whitlock, who heads up publishing here at Sterling Publishing. And I'm also joined by special guest Charles Tarby, who is from Century 21. Welcome, guys. Thanks for coming along.
Hi, Phil. How you doing?
Really well. Charles, what do you do at Century 21, mate? What's your job?
Yeah, well, not much, apparently. Yeah. I bought Century 21 Australasia from the US parent back in 1995, and prior to that I started a company called Combined Real Estate. I started out at Penrith, New South Wales in 1977 with my first real estate office and lived by the philosophy that anything is possible when you don't know what you're doing, which I think is a good way of looking at things. Too many people are far too educated today and they don't make any decisions at all because they can talk themselves out of it. And sometimes when you can't talk yourself out of a decision, it's quite often a great experience.
It's good. So Century 21 now is one of our larger real estate groups in Australia?
I'm glad you said that. If I'd have said that, you might not have believed me. But look, we're a well-branded organisation. There's a lot of experience in the company, a lot of very, very experienced real estate practitioners. Certainly the consumers know we exist, and I think that's the important thing from my point of view.
Oh, everywhere I drive, mate, I always see one of your signs out the front for
rental
for sale.
I run around all weekend putting them up.
So fundamentally, you're a real estate agent.
I am. I'm a real estate agent and still assist people in real estate practice, obviously. You know, I can't get out and list and sell as much as I might have done years ago, but certainly people will ring me, clients, ex-clients, and I work with them to make sure that they're getting the best experience they possibly can. And, of course, being a real estate investor myself, you've got it from both sides of the fence.
That's good. So it's happy you said that, mate, because what I want to chat to you today about, and Alex, I'm going to look to you for your sort of input as well. I want to have a chat about how property investors can work more effectively with agents on the buying side. So we obviously know that the agent works on behalf of the vendor, so they're the guy who's there to flog the property. But a very smart property investor and smart property investors know that relationships with agents, understanding how agents tick, how they work, is fundamental to getting the right price for a property and actually getting the properties you want. There's a lot of competition in the marketplace right now. There's a lot of people out there looking for investment property. So it's the guy who can work most effectively with agents a lot of the time who's the guy who's going to secure the property. Is that a fair comment?
I'd say so. And at the end of the day, the agent does act for the seller, but you've still got to have a relationship with a buyer. You can't go out and negotiate with a buyer to get the best possible price for your seller without having first established a relationship with them. There are barriers you can't cross. I mean, we train people. If somebody comes along and makes an offer, I'm going to say to them in our training, as I've always done, look, I can present your offer to the seller, but I'm not going to present the offer to the seller in a manner that they'll accept it, because at the end of the day, the seller's got to get the best possible price, so I've got to get your highest possible offer before I go to the seller. It's not as though we live in an uneducated world today. You can look around you and you can see what's selling at the touch of a fingertip, with your keyboard. So you really need to make sure that any agent builds a relationship with the buyer, but they've got to make sure that any offer they take to the seller is the highest possible offer, because you're just wasting everybody's time.
Charles, just a question. When an agent is marketing and presenting a property, do they have a preference as to whether they're dealing with a home buyer or an investor, or does it make no difference whatsoever?
No, I think at the end of the day, if you've got a relationship, it makes it a lot easier. So if you have an investor you've dealt with over a period of years, it's going to be easier to guide them. I mean, I know with my clients, some of them would say to me, I'd like to sell my home for X, and I'd go, look, Alex, don't waste my time, don't waste your time. You can't generally say that with somebody you've never met before.
Yes.
But you can tell somebody, if they've got a relationship with you and you've worked with them over the years, you should be able to tell them. And I think that's the key. I think the key, we always say in our organisation, if you build a relationship, the conditions can become negotiable. And I think that's the end of the day. If you can bring all parties together, it works. I've had circumstances where I've taken a person to a home and that person may have treated the seller differently or indifferently, where they may have ignored them or been slightly rude to them, and that buyer will offer a full market price and the seller won't even take it. Okay. It's really interesting how sellers still have a relationship with their home. It's my home, even though I'm selling it. I don't want that person's family living in my home. So it's a very interesting process all the way around.
So how can a buyer then present themselves effectively to, first of all, to the agent who's sort of the conduit, but also then to the buyer who's ultimately the person who's selling their property?
We always say this to buyers. A lot of people ask, what's the best way to work with a real estate agent? And I'm sad to say, I have to say to most of them, don't expect the agent to call you. If you've been to an open for inspection or been to their office, my suggestion is if you want to build a relationship with an agent, if you want to get the best out of the agent, you should be be calling that agent. You should be walking into their office with a coffee once a week if you're an investor, and sitting down in front and say, here's your coffee, what's news? Because I know that when, as a real estate practitioner, who comes to my mind first if I see a property, if I'm out inspecting a property, straight away I'm already scanning in my mind before I even look in my database of who I think might suit this property. And the person that's in my face most of the time is going to be the one that's most prominent in my thinking.
Okay.
It's interesting you say that. I reckon at least half of the properties in our portfolio were bought before they even hit the market. It's because of a relationship with the agent. Now, I personally don't have that relationship with the agent because I'm busy running a media company, but I use a buyer's agent who has that relationship with the agents.
Correct.
And these are the guys who get the phone call. As soon as a listing comes up, bang on the phone, I've got this, they want to shift it quickly, do you want it, yes or no? And we've got some great bargains out of that.
We call it in Century 21 the method of introduction. If you want to get something done, you can either, if I wanted to sell a concept to AMP, I could walk into the foyer of AMP and I could ask the security guard if I can see the chairman of AMP. Now, my chances of getting to the next step are going to be pretty thin. But if I had a relationship with the chairman of AMP, if I knew somebody who knew the chairman of AMP and I utilised that relationship to get my message there, I'm going to get a much better opportunity to get the job done. And that's no different than a buyer's agent or an agent that has a great relationship with their seller or a group of buyers. They're in a position to make things happen. And I think that's the critical thing. That method of introduction, that relationship between all parties is the key to making something happen quickly and effectively for everybody.
So through your experience, do you think most property investors are good at actually building those relationships with agents, or do you think they're just looking at realestate.com and running down the path?
Oh no, I definitely think they've worked it out, and they work out who they like to deal with. For me, again, if I was looking, if I had a development site, I would try to market that development site, if I could, to a builder or a developer that worked with me, because then at the same time, I know exactly what they're thinking. I know that they're going to pay the right price because I know what the price is. They know what the price should be. And if we get rid of all the mucking around and we say, look, that's what it is. You know that's what the prices are. Let's get on with it. We're all going to be happy. The seller's going to be happy. The buyer's going to be happy. And, of course, the agent's going to get a fee in the process. So I think, again, it comes back to that relationship-building process and that method of introduction as to the way in which people can do business. If somebody walks in off the street, you're always a bit concerned about whether or not, if they're making an offer, whether it's genuine, whether they're qualified to buy. If you don't know they're qualified to buy, I could take an unqualified buyer out, even if they told me that they had all of the right mechanisms in place to purchase. I could take them out to a genuine seller. We could go down the road 2 or 3 weeks of getting something done and the transaction falls over. I run the risk of damaging the relationship with my seller. So I'd rather work with people that I've worked with before if I could, and if those people who are investors or coming off the street for the first time, they need to work their relationship with that real estate practitioner to make it happen better.
So how can you, as an investor, start forging relationships, whether it's just you go to an open house and you meet an agent for the first time, or it's a bloke you go and meet and have a coffee with? How do you present yourself in the best possible light so an agent knows you're not a tire kicker?
Yeah, the first thing you really want to do is to demonstrate that you have the ability to purchase a property. You're in a position to purchase now. And I think that's absolutely necessary. If you're going to go to an agent and expect that agent to work for you, to make sure that you take that best possible price or offer to the seller, then the agent needs to know you're in a position to transact immediately. So they call it the 6 Ps, as you know. Previous planning prevents something, poor performance. And to leave it at that, I think...
you can swear on it.
So it's too quick to count the Ps there. Yes.
But the other thing too that's really important, Phil, is that no real estate practitioner, no professional real estate practitioner in their right mind would ever take a low offer to a seller, because even if the seller did accept that offer, because the seller might be in a position where they need to sell, that buyer that's buying the property will never use that agent again, because that agent has just demonstrated that they're not concerned about the transaction, they're concerned about their fee.
So from the agent, the vendor's perspective, what is of greater value? Is it having all your finances there and ready to go? Is it the amount of money that you're offering on the property, or is it speed, saying we can do this quickly? Is there a hierarchy?
Yeah, and you know what? If you had all of those 3 things lined up, Alex, you're absolutely the perfect person to walk into a real estate office, because we're in a marketplace now that's changing. I mentioned this to a group of our sales agents only the other day. If you're in the eastern suburbs of Sydney in recent times, and I say recent times because they to see a change coming through. You feel like you're on the Greek island of Mykonos. You know, you just got the deck chair out and you got the cocktail in your hand, the sun's shining, and people are walking past throwing money on you because they want to buy that property. Or if you're over in Perth, it's like being in Afghanistan. You're in a war zone. You're having to battle with buyers. You're having to battle with sellers. You're having to battle with valuers. Having to battle with banks because you're back in real estate in Perth, which is where I'd prefer it to be because it's what it's really all about. Well, I think if you're in a position to purchase nowadays, and again I say this to our agents, if you want to grow your business, make sure that your bank is fully informed as to who you are and what you're doing at the end of every month. Position yourself so that if a transaction or an opportunity comes up to buy an investment property or to buy a property management portfolio because somebody needs to sell that portfolio and you're the most likely person because you're the only person prepared, then you're going to have the best opportunity. So I think preparedness is a really, really important part, especially in the marketplace we're moving into.
So what do you think about your average investor as a negotiator? I reckon I'm pretty good at it. You know, I can get the deal I normally want to get done, and I'm realistic, and I see that there's two people in every single process and you've got to meet somewhere in the middle. Your average investor, are their negotiation skills pretty blunt and sort of unsophisticated, or do you think there's some good operators?
I'm the worst negotiator for myself. And I think that's it, but I'm not too bad for somebody else. And I think that there should always be a third party in negotiation because, as I mentioned earlier on, you can offend a seller. And if a seller gets offended, as I mentioned, quite often they'll say, I don't care. I don't want to sell my home to that person. So I think having a third party in the negotiation is often a very, very good way to go. It doesn't have to be a buyer's agent, it can. But I think a friend or family or a relative who can build that relationship with somebody and not damage the one that you might want to have, because you can always come back as a backstop. If your third party fails, you can always step up and say, look, you know, Charles probably went in a bit hard and I'm sorry, we really want to buy your home. And I think it gives you a second chance at purchasing a property.
So it takes the emotion out of it, really, and people can get quite emotional.
That's where it goes wrong.
Yeah.
The emotional aspect, that's where it goes wrong. You start offending people, and you look in commercial real estate. When you buy commercial real estate, or you're selling commercial real estate, it's black and white. It's so much per square metre. It sits out there. It's like a development site. It's so much a square metre. When you're buying residential real estate or selling residential real estate, it's a really emotive time, and it can be easily damaged because of that.
I think that's a very good point. Same as Phil, I've used a buyer's agent to buy investment properties, and I bought my own home about 3.5 years ago, and I made the decision that rather than negotiate myself with the agent, I wanted to. Look, I went along and saw the property. I met the agent, did all the preliminary stuff, let the agent know that I was a serious buyer. But then I said, look, I'm an investor. I'm going to treat this the same way as I would my investment properties. I'm going to introduce you to my buyer's agent, and I let the whole process go through. And I mean, I got the property at a price I was very happy with.
You would have paid a lot more, I remember.
I would have done. I'd have paid probably. I got the property. It's in Pimble. Bought it for $1 million. I would have paid probably $150,000 more. The buyer's agent, he came back to me, and he knows how to deal with agents. He deals with agents every single day.
Well, that's right. And when we have a buyer's agent, we've got to negotiate with them. So at the same time, and that's not a bad spot to be in, Alex, because now all of a sudden you neutralise the process. You've got a buyer's agent acting for the buyer and a seller's agent acting for the seller. And we're going to go head to head with each other to make it work. That's not as though I'm going to say to the buyer's agent, hey, I can get it for you cheaper, because at the end of the day, that's where the weak agents are. And people say that to me all the time. Who should I list my home with for sale? It's really simple, really simple. You don't go with the agent that has the most for sale signs out in the field. The perception is that they're doing the best. You go with the agent that has the most sold signs out in the field. That's who you go with. And you go and tap on the door of the people who've got a sold sticker on their door, and you ask them, what was the agent like? That's what you need to do. But again, perception would tell you, oh, gee, that agent's got a lot of for sale signs out there. Well, that scares me, because an agent that has a lot of for sale signs out means if I'm going to give them my home, I'm putting my home in the mix with another dozen other people that haven't sold their properties. So it is a positioning thing, and I think that negotiation is absolutely the critical part. I was talking earlier to one of your colleagues, James, about the fact that the marketplace it's in a difficult process right now. A lot of real estate practitioners are relying on social media marketing to get the job done. That's part of it. It's not all of it, but it has been all of it in the past. Today, people need somebody to help them make decisions because there's a lot more stock coming on. We need to make sure we sift through and get through to what we want, and then you need somebody in there to negotiate for you. I never buy a property from my own company. Anytime I buy, I will never buy off my own company because I don't feel that I'm having the right advantage or giving the right advantage to the seller, because it's easier for an agent to want to say something to me that it might not normally say to somebody. So I think that you've got to pick who you're buying through, and you've got to negotiate effectively, and often you need to step out of the negotiation to make it work.
So sticking on negotiation, Charles, is there a magic formula for entering negotiation? So everyone that wants to buy a place, investor, even if they're a home buyer, want it for as cheap as possible, and obviously the vendor wants the biggest price possible. So do you go in there thinking, oh, well, I'll do 10% under the asking price and that's where I'll start and I'll go up from there, or I'll go under 20%? How does it work? I know there's markets within markets and it's different depending on what's going on. How do you do that?
I think it always comes down to the motivation of the seller, the position the seller is in. And if you can find out what the position the seller is in, whether they're being transferred or whether or not it's for health reasons, etc., if you're able to provide a reasonable, fair offer that meets the terms that the seller has. So if the seller is being transferred to another part of the country and don't want to leave their family behind, and if you come in with a reasonable offer, and because everybody knows where the market is, we can all see it, we can all go into CoreLogic and have a look, with a reasonable offer that meets the seller's circumstances, you're going to have a far better chance of negotiating a position than somebody else.
So finding out really what the motivation of the seller is, try and find out their circumstances, and then make it easy for them to transact with you.
If you have the opportunity to have a conversation with a seller, direct,
or even through the agent, that the agent should be able to give you.
Agents are normally cagey though.
They are, but
the agent can't give you too much information. They're going to breach confidentiality. But if the agent is talking to a buyer and the buyer says, I'm in a position to buy, what's the seller's needs? Would you mind asking them? You can go back to the seller and say, look, the buyers are requesting what your needs are. And you and I both know you're being transferred. Do you want me to tell them if they meet a certain time frame, you'll take this offer? I think that's how you can do it very comfortably. I do think that negotiating is not a difficult process, and it doesn't have to be a cloak and dagger style of presentation. I really don't think that's necessary. Again, it comes back to the experience of your real estate practitioner. Right now, and I've been concerned about this for a long time, the real estate practitioners have avoided communication with buyers and sellers through all sorts of fancy tools that avoid any conversation. It's all about the social media marketing aspect. It's all about the easy open for inspection applications where you don't have to talk to anybody. And I really do feel that the best real estate practitioners are the ones who are trained to communicate a message, the ones who are trained to build a relationship with both parties and ensure that they understand the needs of the buyers and sellers and they match those needs. And I don't think that's a difficult process. And that doesn't mean a lower price. I'm talking about matching each other's needs and requirements.
It's a complicated matrix, isn't it?
It is, yes. No, on that note, just thinking about, you've been in real estate since,
yes,
I believe, a while ago.
44 years.
In terms of being an agent and in terms of your relationships and the way that you do business, has that changed a great deal over the decades, or is it still fundamentally what it was?
It's exactly the same as what it was. The only difference is the way in which we deliver our message has changed. I mean, years and years ago, I always told people I was one of the first people to have a fax machine. The only problem was that all of the clients I were dealing with didn't have one, so I couldn't send anybody a fax. But nonetheless, the message, the way in which we deliver the message has changed. Fundamentally, when we're speaking with people, it's exactly the same process.
We could chat about this all day, but we've only got another couple of minutes, mate. So I want to have a chat to you about the market. Obviously, it depends where you are, what the market's doing.
Sure.
Can you just give me a quick stat? So it's Monday morning here, so our listeners will probably pick this up tonight. What's going on in the market right now, sort of big capital cities?
The clearance rates in auctions have changed. They've certainly changed from what they were like this time last year. This last week, the clearance rates were 67.2% for this week just coming through on a national basis. And this time last year, it was 77.2%. So there's a big difference between the two. And the Sydney market, which was the best performer, actually dropped down to 67.4% in terms of its clearance rates. Still a good number. Melbourne topped it at 73.2%. But mostly Adelaide has been one of the capital cities that's been shining. Adelaide and Canberra have had a very, very good run for the last 4 or 5 weeks. But it is a different marketplace than it was this time last year. A very different marketplace.
Interesting. And we've been talking about it a bit on the show lately, this thing called the bubble.
Yes.
It's going to burst. Everything's going to go wrong. It's doomsday predictions. What's your take on that, mate?
I think that there's always the risk of a bubble in any real estate market, a lot less in Australia because of our lending policies. Interest rates are way too low in my view, for a bubble to occur. That's the thing. If interest rates were up 8, 9, 10% and the prices had moved the way they had moved, I'd be very concerned. But because people are still able to afford their properties nowadays, I think that the term of bubble has probably been overused way too much. Certainly in discretionary spending, but more so in mining areas, we've already seen that. But that's a risk everybody takes when they go into those areas. A lot of people who buy in mining areas are looking for that rental return. We always say for a long, long time, that if you're going to be an investor, it has to be a mix between capital growth and rental return. It can't be just on rental return, because you're going to ride a bigger roller, probably the largest roller coaster ride ever. You want to go on a roller coaster ride, which real estate is, but you want to do it on a kiddie's roller coaster. And if you're buying in capital cities and you're making sure that you're buying within your means, I think people are okay. It's the other areas that are concerning me. The flood of stock that could come through, if we have an overseas collapse in China or the US and those investors don't complete transactions here in this country off the plan sales, there could be a bit of dumping of stock. But people who don't have to sell, don't need to sell. They can just stay in their homes.
I think there's also, I concur with everything you said. I think there's also, the migration to Australia. There is the constant influx of new people coming to live here. I think there's quite tight controls over the amount of property that is put on the market. And yeah, you get a bit of fluctuations in terms of sort of metro developments, but there's never been a real glut in any one market that I've been aware of. I think there's always, you may get a slowdown, you may get a little bit of oversupply in some areas. I used to buy in Melbourne years ago. I bought my first property in Melbourne, an off-the-plan unit, when I lived in Hong Kong, and they built a lot in the South Bank, and they went through a period of time where, you know, you got vacancy rates creeping up to, pretty small, but sort of 3, maybe 4%, but then building just slows down and that gets absorbed.
It does. It takes a while. It is a cycle, and we're in a very strange cycle, and that the interest rate factor, low interest rate that we have in the economy today, just doesn't lend itself, in my view, to a bubble.
So anecdotally, you chat with your agents regularly, all the time, all day, every day. What are they saying about investors in the marketplace right now? Is there are they bullish about the activity coming from investors? Is it something that they seem constant, perpetual sort of growth in, or is it just stable?
They were. No, I don't believe so. I think that the investors are probably the ones sitting on the fence right now, and I think those investors are probably the smarter ones, because if they're starting to cash up, there may be some good opportunities for them in the year to come.
It's good you say that. We're doing that right now. We haven't really bought for a little while, and we're just cashing up, ready to roll. So
all agents like to talk the market up. We like to think it's okay, but the reality is we're in a really strange place right now, and I think that those people who have bought their homes and they're settled in them, great, stay there. You're not going to lose money unless you sell. Those who have been playing the investors market out there that are not experienced, that have been buying properties, some have been buying 2, 3, 4 properties off the plan because it's cheaper to buy 2 or 3 or 4 properties than it is to buy one. Totally. They're probably going to be sitting there a little bit nervous right now.
Okay.
If you're sitting on the fence, you're probably going to get splinters in your backside. I would say.
So, Charles, thanks for coming in, mate. I really enjoyed that. To our listeners, you can check out smartpropertyinvestment.com.au. We've got some more stuff from Charles there. We've got some video this morning. You can check it out and have a look what we've got to say. Thanks for tuning in, Alex. Thanks for joining me again,
Phil.
mate.
Yeah, always a pleasure.
Really good. You can follow us on all the Twitters and Facebooks and all that sort of stuff. You can also follow me at Philip Tarrant on Twitter. And do you a Twitter?
I actually don't.
You know?
No, I don't. I've got enough coming in. More than enough distractions coming in right now. I'll leave that to some of my team.
And we'd like to have you back in about a month or so, mate.
Thank you.
I want to have a chat about your personal investing story.
Sure.
And that'll be really interesting. So
Thank you.
Tune in, guys. Thank you. Bye.